This is really scary. I've got a message somebody has sent from their pension advisor. I'm going to read bits of it out to you because it really is scary what's come through. So this is what the pension advisor has replied back to this individual, and the individual's asked me for my opinion. Charges. I get paid a percentage of your annual management charge, AMC. The idea is that our interests are aligned. No, they're not aligned. You get paid a percentage of the assets under management. That means you've got a conflict of interest because you've got a vested interest to try and get as much money from the client as possible, even if the client shouldn't be in that asset class of equities, for instance, or bonds, and they should just be holding cash. And secondly, when, like in 2022, and the markets are falling, you have a conflict of interest because you are getting paid fees to make sure they're invested with you. So you will not say to them, don't give me your money. You will not say, don't give me your money because I'm going to put it in funds that are linked to the equity markets and they're falling and they're probably going to continue falling. So don't do it. I.e. get out of this asset class, okay, into cash or alternatives. You've got a conflict of interest. He goes on. You want your pot to be, basically I think he means, I want your pot to be as big as possible. Yeah, so another conflict of interest, because that means you've got an incentive playing with other people's money to take high-risk bets with his then. So either you're conflicted on one side or the other, but there's a whole load as soon as you're getting a percentage of assets under management. Admit it and just move on, okay? That's the first thing. Now, you guys pay 1.7% per annum. Charges statement is attached. Of that, I get 0.25 proportion of the AMC of 1.1% and 0.5% on 1.25% and so on and so forth, okay? That's because St. James's Place increased the advisors, proportion of the annual management charge. Yeah, it sounds very innocuous, doesn't it? They increased our proportion of the annual management charge. St. James's Place increased kickbacks to advisors because the advisors were saying, you're asking us to sell rubbish. Okay, you guys have got so much bad press. We don't want to be associated with you and your performance stinks. So St. James's Place said, what if we increase the kickbacks, right? So you keep selling our turds. And it worked, right? But it sounds so lovely. And, you know, as a barrister, I used to deal with this. They'd put it in these terms, and my job would be to put it in the right terms for both the judge and the other side to know that we're not stupid. That's because SJP increased our proportion of the annual management charge. No. SJP increased the kickbacks we receive. I should do an alternative interpretation. We receive. I've attached comparative charges to our competitors. You'll see that our fees in comparison are reasonable. That's not the point. Comparing. It's like saying, look, I burgled your house and you'll notice what I took. The other guys from the other houses that were burgled took a similar amount. We're pretty reasonable, aren't we? Love it. Compensation. Part of the annual management charge is the bit I get paid. Means I see you on a regular basis. Minimum once a year. I'm sorry, regular. And I can't but help think of laxatives now to keep you regular. Regular does not mean once a year. It means you're bloody constipated. All right? Once a year is not regular. Let's work out the math. If you've got £1 million portfolio and the fees he's getting, you're probably paying him £2,500 a year for a 1 hour visit. So his hourly rate is £2,500. A typical partner lawyer in London will charge, not at a top tier firm, will charge about 350 quid an hour. So this guy's charging, what, 8 times more than a partner at a law firm. Seriously? And you might say, oh, he has to do all of this really clever stuff. No, he's passing you on to SJP into their funds. You click a button. The software behind all this, and I've seen the software behind all of this stuff in asset management, it's really simple. You put in a few things about the client so that you're compliant, and that's it. It then feeds it in a spray and pray, low, medium, high risk, shove them into this, shove them into that. That's why you sometimes end up on a large portfolio with about £5.50 in a fund, and you think, well, look, why has he put me £5.50? Because it pro-ratas down. Okay, it just works out the sum at the top. It's so automated to make it a conveyor belt, right? Now, the compensation SJP are offering are for people this guy asked for compensation from St. James's Place because he'd read about it in the press. I haven't seen the advisor since, haven't had regular reviews. The overcharging that you see in the press is those people who haven't seen anyone, so have been paying for a service that they haven't received. Yeah, seeing the advisor wasn't really their problem. It was they've been paying for a service they haven't received, i.e. they haven't received any bloody gains in their portfolios, right, other than de minimis ones. Now it gets more fun. You're going to love this bit. The £426 million that SJP have set aside for claims is for these people. Something called consumer duty, new finance legislation, true, which means financial companies have to treat customers fairly. Well, actually, they've had to treat customers fairly for a very long time. Treating customers fairly has been a requirement under FCA rules for a long time. And because the claims companies are taking 48% of the compensation, SJP have decided to go out and proactively look and find these people who haven't been seen. I like how these put that. SJP, St James's Place, have decided to go out proactively look and find these people. No. What's happened is St James's Place have a duty to find these people. They have a duty to correct the wrong. It's not, hey, you know what, we never saw you and kept charging you, but you haven't reached out to us. That's one thing. The second thing is, it's cheaper for them to go direct to those people than wait for the claims companies that they know are going to come after them. And these claims companies, yes, you're right, they're shysters. They're taking 48% of the compensation. There should be a law against it. What the claims companies are doing, it's a bit like, you know, the personal injury. Been injured at work, and they take 48%. Now, the Solicitor Society, Law Society, really needs to clamp down on these compensation companies. But what's happening is St James's Place is saying, bugger this, we're going to have to pay more to those buggers because those shysters are chasing us as shysters and we'll pay more. Let's just settle with the clients individually because it'll be a lot cheaper, because the client is going to be in a situation where they'll bloody sign anything. They already have. They gave their money to St James's Place. So that's what's going on. Come on. I've sat on enough executive boards and been in finance long enough to know how the bloody city works and how boards work. £426 million sounds an awful lot of money. And of course it is. That's the compensation set aside by St James's Place, he says. But you have to put it into perspective as you have at least £179 billion under management. He's right. 426 isn't that much when you consider they've got 179 billion under management. You know what is a lot? That they've got 179 billion under management. What's that? 17.9% of a trillion. They've almost got a fifth of a trillion under management. A fifth of a trillion. So let's turn the spin around and put it the other way. They've got a fifth of a trillion. And that, how much of that is unsatisfied customers? Come on. Of that, somewhere between a half and a quarter of that will have been paid to advise every year. The claims are going back either 5 or 6 years. I can't remember. Remarkably, all of a sudden, that 420 doesn't seem as big. No, that doesn't seem as big, but 179 billion does. And you're right, 426 million for compensation doesn't seem big. I'm glad you agree. First of all, it seems to imply there should be more compensation given to those existing people. And secondly, there's a lot of people you've not found out who deserve compensation. Thanks for the admission. I'd love to cross-examine this guy. SJP, because they're the largest, probably not measured by share price, are the first ones to be dealing with this. Quilter have already said that they'll need to put money aside. Yeah, because they're also rubbish. Comparing rubbish with rubbish is not an excuse. You know, hey, I'm Saddam Hussein, but I'm not as bad as the other guy. And all the other companies will have to follow suit. Yeah, they will. Thank you for that admission. This guy's a liability to his industry. I love it. All the others will have to follow suit. What he's saying is there's been a load of us. It's industry-wide, the scandal. It's institutionalized, the scandal. And this is an insider admitting it's institutionalized. These claims agencies are now going after finance companies as well. Yeah, the claims companies, what you're saying is bloody ambulance chasers. They're chasing more ambulances. I agree. Claims companies are not nice people because they take so much money from you, the person who deserves it. But saying that they're going after finance, and I think car finance is an area to go after. Absolutely right. But to say, yeah, well, look, we're not the only criminals around here. There's others. Not that I'm alleging a crime has been committed. I mean it in the proverbial jovial, bantery sense. We're not the only shysters. There are others, and they're going after them as well. So, you know, it's just, look, we're all at it. We've all got our hands in other people's pockets. That's finance. That's the city. That's how it works. Now, shut up. Performance. I haven't seen many results recently regarding performance. Yeah, because people have given up. Remember, 1 out of every 6 advisors works for SJP. Just imagine. Institutionalized nationwide. What a tragedy. So a story about them creates a lot of traction. No, it creates a lot of traction because there's a hell of a lot of advisors who are underperforming. That's why there's traction. I think that's mainly because everybody are now committed to changing their fee structure. Hey, this is the guy who turns up at a job interview. So tell me your weakness. I think I just work too hard. They're committed to changing their fee structure. They're committed to increasing kickbacks to advisors because their business is going to fail otherwise. No more exit penalties. No more exit penalties because you know they're going to get sued for that stuff as well, don't you? Exit penalties breach so many EU guidelines before Brexit and after we passported in so much of that stuff. Hey, claims agencies, if you're listening, go for the exit penalties. Like those credit card charges. Remember the companies that said credit card fees and all the rest of it? You can get them on exit penalties. You can so get them on that. All right? There are 2 reports that appear every year, Spot the Dog and Yodeler, but both these reports get a lot of traction in national press. That they tend not to mention is that both these companies still sell leads to IFAs. SJP are taking Yodeler to court regarding some form of misrepresentation. I think the point he's making here is they're going to shoot the messenger. The message is true that SJP are a dog, but the messenger didn't tell you that they sell leads to IFAs. So we're going to shoot the messenger to stop in delivering the message, which is true. Honestly, I get this guy on a stand to cross-examine. I will put my barrister's robes back on, and I will dust off the wig and go guns blazing on this guy. I think the rest of the industry are going to tell him, look, mate, shut up. I've attached email to your investor returns, blah, blah, blah. Benchmarks, if we take 3-year figure, the portfolios have achieved. Okay. Your pension has grown 5% per annum over 3 years. That's what his bottom line is. I want to cry. 5% per annum over 3 years. Isn't that less than inflation? I get 5% on instant access on my bank account cash. Hey, listen, the good news is you put this guy's kids through private school. I'm bringing my old TV show back. We're going to be doing more of these. You better like and follow.